Pre-orders for the iPhone 16 beginning today, with many expecting Apple Intelligence to drive a multi-year device upgrade cycle. Morgan Stanley's Erik Woodring thinks it could be Apple's largest ever, and he joins me now. Erik, great to see you. Apple shares, since the event on Monday, have actually underperformed. They've lagged a little bit. Does that mean it was a sell the news response, or did the market not find anything in the presentation to get greater conviction in the strength of the upgrade cycle, do you think?
Thanks for having me, Mike. So I do think that we are entering a seasonal period of relative underperformance for Apple. The iPhone launch event is historically a sell the news event. Apple historically does outperform into the launch event by a fairly considerable margin. We saw that this year. So I wouldn't interpret the market behavior over these last few days as being all that abnormal relative to history. But I also do think that is representative of the reaction that investors have to what was announced on Monday, which is still a relatively measured, slow, and staggered rollout of what is the key feature this year, which is the Apple Intelligence platform.
What would represent kind of a success or an upside surprise in terms of initial orders coming through for you?
Sure. So these first few days are very noisy. There's a lot of data when it comes to pre-orders over the weekend, lead times, which, I'd remind everybody are dictated by both supply and demand. And actually, lead times are important on a per model basis. Lead times for one individual model does not dictate a cycle. It dictates how well that specific model is performing. So there will be a lot of noise over the next week as we go from the pre-order date today to the date of availability, which is a week from today. It's my job to dissect that noise and ultimately try to maintain a fairly clear narrative. And I think what I'm really looking for is the directionality of lead times, right? Day one lead times, at least reports have indicated, are a bit lower than past cycles. What matters to me is now how that lead time trends from here. Does it go up? By how much does it go up? How does that look relative to history? And importantly, how does that look across all four models? I don't want to focus too much on one specific model simply because Apple is going to ship over 200 million units across 13 different models. There's a lot that is riding on not just one model. That's really what I'm focused on over the next, let's call it 7 days.
And the features that have been showcased, the Apple Intelligence features, do you feel as if that's going to create any sense of urgency, or is it just a matter of, well, this is going to be one fewer reason for me not to upgrade if I need a phone, because at least it's going to be ready for whatever, comes down the pike? I'm wondering the ways in which Apple is long-term going to get paid, so to speak, for AI capabilities. And is it just about stronger hardware cycle, or are there other ways?
Listen, first and foremost, it will be about a stronger hardware cycle. Hardware represents 75% of total revenue, about 60% of total gross profit dollars. So it starts with hardware. We've made the argument several times that there is a multi-year device upgrade in front of us. That is kind of number one, what we think is important. But I do think that services has to be part of this conversation. Services being 74% gross margin, growing double digits. This would be, seemingly incremental to what we see the current run rate of services being. Meaning if Apple can charge for something like a high-end subscription service to Apple Intelligence, that becomes incremental, that becomes new. If Apple Intelligence is indeed the platform we think it can become over time, that can become a significant driver of incremental services revenue. You can think about better monetization of the App Store, potential a reason to charge higher prices for first-party applications and services that Apple sells. Today, there's a number of different kind of areas where services can be monetized, and just given how high margin they are, and that this would be incremental, I don't think we should leave services out of this conversation. It's just the initial read-through will come through on the product side before you see it on the services side. Services think of as kind of a long-tailed annuity.